What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Don't forget to smash that like button as well, so that other dividend investors can see that. And the more you guys hit likes and the more you guys are interacting on my channel, the more it's going to motivate me to post videos and stuff. So I made a strategic move, let me just say that, my M1 finance portfolio with this stock. I actually saw some really good news today with this stock. But first of all, the energy sector, it's down right now. So I had Ryman Hospitality Properties, which is a real estate investment trust. It was way down, put money in, I was up like 200% on it, and it just started going higher and higher and higher, and I'm like, oh, I can't keep up. So what I decided to do was sell it and hit it, go right after the energy sector. And one of the reasons too was this stock is actually distributing dividends. It has a high yield and it's very stable. So first, let's understand what the stock is, okay, what it's about, where they're located, the revenue. Then we're going to see how it's done against the S&P, and then we're going to look at the dividend history, and I'm going to show you how many shares I own in my dividend investing strategy with this stock, especially with my M1 Finance Dividend portfolio, which is a fractional share, but also what my long-term goals are with this stock, because I'm going to be long in this stock. I feel very confident in it. It's a stock that's in demand, and it's a very hot energy stock. So let's check it out right now. So first of all, I'm investing in a Canadian company. Let's think about that. Calgary, Alberta, Canada. When I think of Calgary, Alberta, Canada, I think of Bret the Hitman Hart because I'm a big wrestling guy. But these guys have liquid pipelines, they have natural gas pipelines, and they have utilities and power. So these guys, very powerful, very strong. Top 100 global energy leaders in 2018. Okay, their Bloomberg's 2019-2020 Gender Equality Index have been ranked among the best 50 corporate citizens in America 18 years in running through 2020. This is very strong. They're traded on the New York Stock Exchange as well as Toronto Stock Exchange. So very stable company. A lot of word of mouth. It's a phenomenal natural gas company. They are very big. They're very powerful. And if you read this right here, we deliver energy, the energy people need and want to heat their homes and keep their lights on and keep them mobile and connected. Just think about this, okay? I posted a video, okay, on the First Energy, okay? My apartment complex, we're stuck with First Energy. Houses, everything, okay? I'm not a fan of First Energy as a company. I think they're actually, they got some issues. They're a dumpster fire. They're so down and they generate so much revenue. Enbridge has a better reputation, first of all. Natural gas, okay, there's some companies, I'm gonna give you another one that I'll name that I'm looking at, which is UGI Corporation. They're big. Enbridge is big. First Energy is big, okay? Big companies, all right? So again, liquid pipelines, natural gas, utilities, and power, okay? Everybody needs power. How do I have this on, okay? In my apartment complex. Energy went out, guess what? Started pumping this apartment complex. A generator with natural gas, okay? Heating us up, giving us energy. So you're gonna need it, okay? It is what it is. It's natural gas. It's, you can have solar, you can do this. You're still gonna have natural gas, okay? It's cheap, it's in demand. Now let's go and see how it's done financially. Okay, look at this. Look at this real quick. All I did was just Google it. $32.9 billion. $32.9 billion. Now look, it's going against TC Energy, 13.68, Kinder Morgan, 13.7, Canadian Natural Resources, 21.3 billion. 32.9 billion. In the stock exchange right now, it's $34.23. $34.23. Let's look at it real quick on how it's done against the S&P. Okay, at one point, it was beating the S&P and keeping up with them, and it took a little bit of a hit. It's going down. You know, I tell you guys, watch the chomp sometimes when you look at stocks. How are they doing, you know, with their revenue and stuff? Because Prospect Capital, when I showed you a video on that, look, it was just like this. It was the chomp. So one goes up, one goes down, and it's almost like you can see like a gator mouth. So that's one thing that raises a red flag. But the revenue, $32 billion, okay? Another thing, which I'm going to get to, is the dividend on this stock. Enbridge reminds me of AT&T. You know, it's just not really up as much, but the dividend is something you can't take, you know, for granted. But you got to take advantage of it because it's so down. So I'm glad that I sold Ryman Hospitality Properties and I put a ton of money in this stock. I'm going to show you what's nice right now with it as well. Okay, it's right at what, $43? Okay, I think that was the last one. On the 10th, $43.55. We're going to jump to the dividend history. This is what makes this a special stock for a dividend investor. Now, if you had an IRA or Roth IRA, usually my philosophy is if you have a traditional IRA or Roth IRA, you want to get stocks that are growth stocks. They increase price per share, they increase their dividend. So if you put $10,000 in, I don't know, a stock or something, you're going to let the compound interest kick in. You're going to let the compound interest kick in. The price per share will go way up. Maybe it'll split. Like, look at Apple, you know. Imagine if you had all these Apple and it split, you know. Perfect stock for a traditional Roth IRA. And it's still a good one for your dividend portfolio. But this one is a dividend portfolio stock, in my opinion, just by the way it looks. You know, it's not going to go up. It's probably going to increase its dividend. It's, you know, it'll probably be stagnant. It'll be almost the same price, it looks like, and it's increasing its dividend. This is what you love if you're a dividend investor. You go in for the kill. This is my honest advice. I'm going to show you its dividend history. Oh, what do we see here? December 8th, Enbridge announces a 2021 financial guidance, increases dividend, and provides update and strategic priorities. So, okay, reaffirmation of a 5.7 average long-term annual distributed cash flow. Okay, company expects a full year DCF per share to be midpoint of $4 to $4.80 per range. The company declared, okay, real quick, the company declared its 26th consecutive annual common share dividend increase, raising it by 3% to about, let's just say 83 cents. You can round it to 84. You can say what you want. 0.835 per quarter, $3.34 annually, effective March 1st, 2021. So let's just jump real quick to its dividend history. I just want to show you how it's looking. Whoa, Nelly, look at this. 31 cents, 2013. 35 cents, 2014. 46 cents. Okay, you know, that's a little bit crazy, but then it jumped a little bit back down. 2015, 2016, 2017, 47. 2018, 49, what was it? 47. 2018, 53 cents. 2019, 55 cents. 2020, 61 cents. This is really nice. Look at this. The increases over time. Okay. The dividends are increasing. Okay. Here's their declaration date. Okay. They're increasing their dividend over time. Now, are they doing this because they're having financial issues? Well, I don't think so. In my honest opinion, again, I'm not a financial advisor, but you go for the Benjamins with stocks like these, AT&T, Enbridge, First Energy. It's all about the Benjamins, my friends. So this is what I'm going to tell you about Enbridge. One, it's good to diversify your dividend portfolio. Two, it's in demand. Okay. Three, dividends are up above 50 cents. Dividends have been increasing. Okay. Number four, again, it's an energy demand stock. People need it. People need to use natural gas. People need to use energy and utilities. And last but not least, it's one of the most popular dividend stocks amongst investors. I went on Twitter, okay, before I even really looked into this company. I bought some shares and said, okay, this is nice. The dividend's really good, 7.28%. Is this really safe? But you know what? Screw it. I'll throw money in. Okay. It looks like, I mean, let me just, this is, very exciting. I want to double check if it's 34.23 real quick. Okay, on one website it said it was 43, but now it jumped to 34.23. So we're gonna say 34.23 is the most recent one. $32.9 billion. Okay, it is a very powerful company from Calgary, Alberta, Canada. Okay, 7.61 dividend yield. How can you say no to this stock? So let me show you how many shares I own and what I plan on doing with this stock. At the moment, I have 10.7 shares of this stock. And it's, right here on M1 Finance. I got it when it was down. Before they really even made a announcement with their dividend yield. I put money in these guys, liked what I saw, and it's like an AT&T, but it's an energy stock. So I really like what I see with this stock. My goal, I thought about this. I did put some thought in this. The thing with this stock and like AT&T is, they're not going to grow as much, but you might as well throw in a ton of money in these guys. Let them distribute their dividends so that they can start buying other stocks for you and just keep on buying more and more and more. That way the compound interest will kick in, and then the other stocks will buy them, and then we'll go from there. Because my dividend portfolio is at $12,213.18. I'm up 75.61%. Earned dividends $264.80. Sitting on my ass doing nothing, putting money in. Last night, I worked, I finished my exam, by the way, the other day. Would you believe this? 92.99%. I was 0.1 from getting an A in that class. So I'll settle with my A minus. But here's the thing. I have a sign-on bonus coming in with my next paycheck, okay? I'm going to probably throw it in here. I'm considering throwing it in here and letting the compound interest kick in. Because let's think about this. Let's just say I'm working, it was like a sign-on bonus for a year. I'm working for those guys, and I just say, screw it, okay? I put in $1,000, and the compound interest already kicked in. I could probably be up like 1,500, within X amount of years. But I plan on staying with my employer. They're paying for my graduate school. And so far, strategically, this is working very well. I'm working, I'm picking up, getting my bank account very strong and stable. And I thought about starting a Roth IRA, but I'm going to be honest with you. Why not just keep on going with this dividend portfolio? Give myself a raise, okay? I didn't get a raise this year because of the bug, okay? My employer did not contribute into my 403B starting in March, and I work in a hospital. Isn't that crazy as a nurse? And I'm almost at 20,000. Okay, I set up this section. Okay, because I wanted to get the ball rolling. Okay, with my dividend portfolio, so that I can start on a new sector. So this stock, Enbridge, okay, where is it? Right here. It's going to set the tone for this bad boy right here. And then once this starts rolling, it's going to start distributing dividends. And I'll start throwing it to all these other ones. So it's just setting itself up for a super. It's gonna be really amazing. And there's strategies that I have. I'm gonna post Matt Ramey's dividend portfolio strategy. I plan on doing that next week. I'm very excited to do a follow-up video. I already notified him that I will be doing a follow-up and show his strategy, what he did, and how I implemented it with my fractional share dividend portfolio, because it was so helpful. I knew what stocks, like, Pfizer throws dividends this time, AT&T throws it this time, Coca-Cola throws it that time. So it's starting to really, the Death Star is starting to get very powerful. So I appreciate you guys watching this video. If you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Hit that smash button. God, I can't even talk. Smash that like button and let me know what you think of this stock. A lot of you guys who are new to my channel, or if you guys are veterans, make a comment on here. The more active we are on this channel, the more videos I'll make, the more videos you'll see on stocks that I own and what I plan on doing. That way it could help you guys. There could be a possibility that it could spark an idea or a strategy for you to enhance your dividend portfolio. So I'm excited. I'm excited to see this grow. I'm going to tell you, start of the year, I cannot tell you how many hours I put in at work, picking up and just throwing money in here. I literally just pumping money, paychecks, pumping money. Had enough for graduate school, and it's really starting to pay off. Now, again, this is $264.80 in dividends, but the more I start putting in and the more shares I have, the more damage I'm going to do, the more powerful the turbo laser for the Death Star is going to be. So that's going to be the good thing. So again, thank you. Again, you guys have a good Friday and have a good weekend. I'm not sure if I'll post a video, but just keep an eye on my community section. I might try to squeeze one in, but just stay posted, look at some videos. Check out that First Energy video. I'll put it in the comment section as well. So thank you again. You guys have been phenomenal. It was really a good stress reliever in the middle of school to post videos and keep my mind off of exams and being stressed out. So this is kind of my hobby and I enjoy doing it. So that's pretty much it. And thank you again and have a good one.